Hello, everyone. Today, we're talking about something many people are stuck in, but don't realize it, or realize it but don't know how to get out: the credit card debt trap. Credit cards are designed to get you into debt. This isn't a conspiracy theory, but a truth that credit card companies don't want you to know. They don't make money from annual fees or transaction fees, but from the interest you pay. I believe many people start using credit cards for convenience, paying for food, clothes, or online shopping, thinking they'll pay it back at the end of the month. But then payment day arrives, and it turns out there isn't enough money to pay the full amount, so they just pay the minimum, thinking it's no big deal, just the minimum for a month or two. This is where the credit card debt trap begins. Let's look at a real example. Suppose you have $10,000 in credit card debt at 20% annual interest, with a minimum payment of 3% of the balance. First month, you need to pay $300 minimum. Interest is about $167, meaning only $133 actually reduces the debt. Second month, balance is $9,867. You pay $296 minimum, $164 interest, only $132 reducing debt. If you only make minimum payments forever, it will take over 31 years to pay off, and you'll pay over $22,000 in interest. $10,000 debt, but you pay $32,000 total. This is the destructive power of compound interest when it works against you. Even worse, while you're slowly paying off credit card debt, you're still using the same card to buy things, so the balance never decreases and keeps increasing. Many people fall into what's called the minimum payment trap, paying money every month, but debt never reduces. Credit cards have many tricks designed to make you spend more. First, high credit limits. They give you limits higher than your ability to pay, making you feel like you have money to spend. Second, attractive promotions like 0% interest for the first 3 months, or cash back percentages that make you spend more. Third, automatic credit limit increases without needing new approval, allowing you to spend increasingly more. Fourth, hidden fees like over-limit fees, late payment fees, cash advance fees. Fifth, complex interest calculations. Some cards charge daily interest, some compound monthly, making it impossible to calculate true interest. The psychology credit cards use is interesting. Paying with cards feels less painful than paying with cash, called the pain of paying. When you pay with cash, you see money disappearing from your wallet. When you pay with cards, you just sign or press a button. It doesn't hurt as much. Studies find that people using credit cards spend about 12 to 18% more than people using cash. Another psychology is mental accounting. We separate money mentally into categories. Cash is real money, credit card money is future money, making us feel like we're using someone else's money. The result is excessive spending and buying unnecessary things. Credit card debt doesn't just destroy finances, but mental health too. Stress, anxiety, insomnia are common for people with high debt. Family relationships are affected too. Fighting about money, hiding debt from spouses, lying about spending. Careers are affected as well. Being stressed about debt affects work concentration. Or some people work multiple jobs to pay debt, leaving no time for self-development. How do you know if you're trapped in credit card debt? Warning sign 1, only paying minimum amounts every month or not paying full balance. Sign 2, using credit cards for daily necessities like food, gas. Sign 3, using one credit card to pay another, called balance transfer, to solve problems temporarily. Sign 4, having credit card debt more than 1 month's salary. Sign 5, not knowing total debt amount or how many cards you have. Sign 6, frequently worrying about money or feeling stressed seeing credit card bills. If you have these signs, you're already trapped. But don't despair, there's still a way out. How to escape the credit card debt trap. Step 1, stop using credit cards. Take cards out of your wallet, store them in a drawer at home, or cut them up if you can't control yourself. Step 2, gather information on all debt, balances, interest rates, minimum payments, due dates. Step 3, rank debts by interest rate from highest to lowest, then pay off highest interest debt first. This method is called debt avalanche. Or, if you need motivation, pay off smallest balance first. This method is called debt snowball. Step 4, find money to pay debt. Reduce unnecessary expenses, sell unused items, find extra income. Step 5, pay as much above minimum as possible. Even paying just $200 to $300 above minimum can reduce payoff time by several years. Step 6, call the bank to negotiate. Ask for reduced interest rates, payment plans, or waived fees. Many people don't know they can negotiate, especially if you're a long-time customer or have temporary financial problems. Step 7, use balance transfer wisely. If you have another card with lower interest, but watch out for transfer fees. Step 8, create and strictly follow a budget to prevent yourself from using credit cards again. Using credit cards requires a lot of discipline. Many people think use first, pay later, but really you should pay first, then use. Simple principle. If you don't have money to pay full balance this month, don't buy with credit cards. Credit cards should be used as tools, not as ways to get money. Use for convenience and security, but pay full balance every month. When used correctly, credit cards offer many benefits: cash back, points, purchase protection, travel insurance. But when used wrong, credit cards become demons that destroy your financial future. Prevention is better than cure. Teach children about finances so they don't fall into the same traps we've encountered. Before we wrap up, I have a challenge for you. Anyone listening to this point, do these 3 things within the next 24 hours. Challenge 1, gather all your credit cards and check total debt, interest rates on each card, and calculate how long it would take to pay off if you only make minimum payments. Challenge 2, if you have credit card debt, call the bank to negotiate lower interest rates or payment plans. Even reducing just 1% to 2% can save a lot of money. Challenge 3, take credit cards out of your wallet, store them at home, and try living with cash only for 1 week. See how much your spending changes. Can you do these 3 things? They'll be the first steps in escaping the credit card debt trap. Finally, remember that credit cards aren't money. They're debt. Every dollar you spend with cards, you must pay back with interest if you don't pay on time. Self-control and financial discipline are most important. Don't let credit cards control your life, but control credit cards yourself. Thanks for listening. I hope this episode helps you understand credit card debt traps better and know how to escape them or prevent getting trapped. Don't forget to do the challenge I gave you. See you in the next episode.